Two major things happened today. Federal Chairman Jerome Powell announced that interest rates will not be cut. And then number two, I took one stock position in my portfolio that was at number 5, and now it's the largest holding in my portfolio. And I'm going to explain why I'm tripling down on this particular stock. But before we jump into it, make sure to hit the subscribe button if you aren't already subscribed to the channel. And also please smash the thumbs up button for the YouTube algorithm if you get value out of this video. But let's go ahead and dive into it. As you can see, the Federal Reserve kept its key borrowing rate targeted in a range between 4.25 and 4.5%. I'm going to be talking about where the market's headed from here as this news has came in. Obviously, the Federal Reserve on Wednesday kept interest rates steady amid expectations of higher inflation, lower economic growth ahead, and still pointed to 2 reductions this year. So still rate cuts are on the table, and we'll jump into that in just a moment. But some bullish things that I heard out of Jerome Powell as he was answering some questions was he said that uncertainty about the economic outlook has diminished but remains elevated. So he actually believes that the uncertainty we were seeing back in April during, the tariffs uncertainty and all that has pretty much subsided. So that is actually a good thing for the markets. But as far as interest rate goes, we're looking at the CME FedWatch tool, something that I look at on a weekly basis. And this is the futures for interest rate cuts. So an interest rate cut is still being priced in either in September or October. So those, there's definitely going to be a cut on the way. And then still a 90% chance that a December rate cut comes through. So very high probability that we will get rate cuts towards the end of the year. And then 3 additional rate cuts into next year. And this one being a major change, actually next year, December, 64% chance. That was previously at 30%. So we're definitely getting 5 rate cuts from here, which is absolutely bullish for the markets. Now, if we take a look at QQQ, the NASDAQ 100, we can see that we're just kind of trickling down here, okay, to this 528 area. We may bounce off this 526 before heading back to previous all-time highs at 540. And that's really what I think. I think we're just kind of rotating between individual stocks, and eventually people will put those profits back into the Mag 7, Apple, Amazon, Google, those stocks, which will push the QQQ to new all-time highs. So really waiting for that. And if we look at the VIX levels, okay, this is such a wonderful opportunity to take advantage of option selling and collecting premium because the fear is still elevated in the markets. Today, we closed at 2013, which is above this zone of confidence and greed. So usually when the VIX is above 20, that means there's still quite a bit of fear in the markets, and options premiums are way higher. So when you're selling put options, you're collecting more premium because they're priced in more expensively. So that's what I've been doing, and we're gonna get into one specific stock that I'm just tripling down on, and also why I'm pretty much 90% allocated right now. But before we jump into the VIX cash allocation levels, remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. But if we take a look at the VIX levels for 2025, 2026, this is what helps me be safe during crashes. As you could see, during the last crash, a lot of people on YouTube were very fearful, very pessimistic, but I was one of the more optimistic people because I had a lot of cash ready to go to take advantage of the major crash, okay? So if you wanna stay safe, but still obviously, meet your return goals, then this is what will keep you safe. So this is what keeps me safe. VIX is now above 20, it's at 20. So essentially, I could be 80 to 100% allocated. Now, I am about 89% allocated. I have about 11% cash, just in case we head a little bit higher on the VIX and the market comes down a little bit more. I want that last 11% of cash to be able to take advantage of more cash secured puts and maybe even some leaps call options on my favorite stocks. But that's what allows me to do it, is because I follow these cash allocation levels. Now, let's go ahead and jump into the stock that I tripled down on. I'm gonna explain why I did so and why this company is going to much higher levels. But if you do wanna join my high-level mastermind, that will be down below in the description. At the top of the description, it's Options Trading University. You could watch this video and even watch some of our client testimonials. I upload new client testimonials every single week here, so you could check those out and book a call with our team. And if you also want my free trade ideas, I give those out on Instagram and my free newsletter, which are both down in the description. So let's go ahead and jump into it. This stock we are covering is HIM. So you could see the HIM CEO right here, Andrew Dudum. He said, what launches tomorrow took many years to perfect, from the industrial design of the machines to the safety procedures delivering consistency and quality. An apple a day, they used to say. So look at this wonderful hair restoration, these hair restoration gummies, which is actually minoxidil and biotin. This is designed for women's hair loss. So this is a new product that they just launched. The category is a $24 billion a year category. So this is a wonderful opportunity for HIMs to take advantage of not only providing awesome value to their customers and patients, but also creating this product that could generate extra profits for them. So they just announced this. As you can see, this is kind of how it looks up close. It's a minoxidil and biotin gummy that's designed specifically for women to help them with hair restoration and or hair loss, right? Because it says like 12% of women below a certain age experience hair loss. I think it's below 40 are experiencing hair loss, and this can definitely help with that. So very cool that they have a new product line that they rolled out. That's always beneficial to the stock. Now, if we take a look at their investor relations pamphlet, their last presentation they did back in May. By the way, I love whoever is putting together their investor relations presentations is on point. Like, this is the type of quality and detail that we want to see as a stock investor and as an investor in different individual stocks, because some other ones for some different stocks are just absolutely horrible. It's like, did you even spend 5 minutes on this presentation? This one has, a massive amount of detail. And I really love right here, it says, we believe we have the ability to help over 100 million consumers across specialties we serve. So again, that was a new product in the hair restoration space, but they still have a whole host of products coming out, such as testosterone, menopause medication, longevity, sleep, preventative medicine. So they are still tapping into new markets and acquiring new companies such as Zava, in the United Kingdom. They're based in UK, Germany, and France and Ireland. They have 1.3 million active customers. So again, they're expanding their consumer base and they're expanding their product lines and offerings to those consumers, which tells me, okay, that's how companies accelerate forward. That's how they increase net margins and profits, okay? So this company is massive, and as far as their PE ratio goes, today 86 PE, which is still very low. If it's under 100 and it's a high growth company with a small market cap like 13 billion, that's essentially a smaller market cap company. If you were to look at like Novo Nordisk or Eli Lilly, those ones are in the hundreds of billions. So I think that this stock has the potential to 10x. Obviously, that's not guaranteed. There's risk with holding stocks, but I'm playing it, and I'm going to show you exactly why and how I'm doing this. So another thing I look at is not only their net margins, but I look at their cash on hand. This company has $273 million cash on hand, which they could pay their debts, 5 to 6 times over. So that's what we want to see, especially during recessions, bear markets, or crashes. We want to see companies that have ample amounts of cash that can weather a storm, and this company definitely fits that criteria alongside their good PE ratio, which is what I love. So if we take a look at the stock, okay, I'm playing it in a very specific way. I'll show you my portfolio in just a moment, but I'm essentially selling cash secured puts because I'm seeing the highest amount of premiums in this particular stock, okay? Anywhere from 5%, 6%, 7%, obviously not guaranteed. There's a lot of risk that goes on with that. This for educational purposes, but I'll show you exactly how I'm doing it so you could just see how I'm getting those types of returns, okay? So as you can see, the stock is kind of breaching out of this classic bull flag, And I think that it will head back up to the $72, $73 area. So that's kind of what I'm expecting. There's momentum building up in the stock. The RSI is heading towards that overbought region. We're seeing potentially a bullish crossover on the MACD down here, a little bit more green volume, buyers stepping in. And yeah, you could definitely see this thing kind of pick back up. So how I'm playing this, let's go take a look at my portfolio and what I expect. But I do expect it to get up here, but I play it a lot safer than most. So again, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. But let's take a look at the account, okay? So here's the account. You can see I have a lot of positions, but HIMS is officially the largest position, as you can see right here. This is how much collateral I currently have in cash secured puts on this particular stock. So I have the 47 strikes, the 48 strikes, and just recently today, the 50 strikes, okay? So I feel very safe at that level, which means that if the stock, okay, if the stock came down to this 50 level, which is right here, okay, it would have to come down all the way down there by expiration. And if it did, I would be required to buy 100 shares of the stock per contract that I sold. Okay, so the stock would essentially have to come down 17%. I would pick up a 17% discount on the stock, okay? And then I could ride it back up. And I get paid a premium. So that's what's nice about this strategy with the cash secured puts is that I could acquire the stock at a lower price and just be a little bit safer than buying the stock today at $61, because this thing definitely could bounce around in this area for quite some time before heading back up, okay? So that's how I'm playing it, because at that level, the premiums are very rich. And if we take a look at the premium, so I'm gonna go to the options chain so you can see how much and calculate on your own how much premiums are being paid out there. So if I go out to July 25th, 37 days out, right? And I just go to that 50 strike, you could see how much, $2 there, $1.96 there. Or if you go a little closer, right, you could get, at the 55 strike, which is a 29.30 delta, which is typically where I go, right? You could get, a good $3 times 100, okay? So it's a pretty significant return on capital. And that's why I prefer to sell the cash secured puts on this particular stock. Now, if I were to do a leaps play, okay? If I were to do a leaps play, I would wait for a pullback to this 57 area, maybe even 56 if we get that. And then I would do something very long-term. And this is just for if I was a little bit more risk on with the stock. I prefer to do the cash secured puts because I love the premiums in collecting those up front versus paying for a call option. But if I were to buy that call option, I'd probably go out to either December 18, 2026 or even January 15, 2027, just go super long out, and I would just pick up the 60 strike, okay? And that's $2,800, okay? So that's gonna be my play there, but I do think HIMS has a very bright future ahead of it. Again, PE ratio is at 88. Back during this spike that we saw up to 73 before the crash, the PE ratio was at 130. So this stock has a long ways to go and a lot of growth ahead of it, especially since they only have a couple million active subscribers. I think they'll have 20 million, 30 million active subscribers in the next 5 to 7 years. So this is a wonderful stock. And if you want more videos like this, make sure to hit the thumbs up button, and I will see you in the next one on Friday. Take care and stay safe.